Welcome back to another video. Now this is a really important one. The property market has crashed. Now you may have been sitting in anticipation, hearing things on the news, hearing things in the media about high interest rates, high inflation, which is going to cause a property crash. You may be wondering when it's going to happen. Well, I've got news for you. The property market has already crashed. So let me explain what is happening, what has caused the property crash, and what you should do during this time, and how you can position yourself correctly, whether you are buying property, own property, or thinking about investing in property. Now, because this is quite a bold statement, I'm going to do something that I haven't done before or don't usually do, and that is I'm going to get my whiteboard out, okay? Yes, I'm going to get my whiteboard out and explain exactly what's going on with the property market. Now, you see, the thing with property, it moves quite slowly. So imagine a boat, quite a large boat, and that boat is turning to the left, and then all of a sudden you steer to the right. What happens is this boat will still continue to go left for a little while before it stops and then gradually starts going to the right again. So this is a bit like property, and we're at the point where we're now turning to the right, but the boat, or property in this case, has now stopped going up and it's now starting to reverse. And the thing is, estate agents are putting up prices for properties that they were going for last year. Now I've seen lots of cases where property just is not selling at those prices anymore. Even though the estate agents are trying to push for higher prices, they're just not selling. I'm seeing properties being reduced. I'm seeing properties being on the market for a lot longer than they were previously. In fact, I'm seeing that a lot of owners are having to sell their properties at 10% or more lower than the asking price. Now, according to our good old friend Google, a housing crash is defined as the price index falling by 10% or more from its previous 52-week high. Again, another example of property moving slowly, but for me, this is already happening. It's happening right now. Now, when you're in property, as I am, and you're actively in the market, watching the market, you're viewing properties every week, you get this feeling, you get a feel about the whole market. And I feel that the market is crashing. Just because estate agents are putting a house up for 150,000, for example, doesn't mean that house is going to sell for 150,000 anymore. So without the data, without even the technical analysis, it's just a feeling you get when you're in property, when you're in the market. Now, I myself even have a house up for sale at the moment. Now, this property was valued at £125,000 just a few months ago. It's now being dropped to £115,000 and it's still attracting very little interest. Now, I have no doubt that this property would have been snapped up last year for £125,000, no problem at all. Now, I'm struggling to sell it at 115. It's probably going to be more like 110 if I do decide to sell. Now, that's over 10% decrease. Now, that's crash territory. Now, I know that the property market is diverse and has to be based on stats as a whole, so we have to counter in all parts of the country, all types of property, and the price index across the board. So now I'm going to get my pen and whiteboard out, and I'm going to show you what I think is going to happen, where we're currently at, what's caused this property to crash. Now, the media hasn't published this yet. It's not in the papers that we had a big crash. However, they do keep feeding little snippets, little pointers that we are heading for a decline in property prices. However, for me, it's already come, it's already here. And I'm going to explain 3 important variables that have affected this. So here, I'm going to show you why this is happening and where the market is likely to head next. So see this graph? This is what we can normally expect from the property increase over time due to inflation. Property always goes up in price, as we know. Now, this blue part here is what I call the overinflated range, where property prices went higher than they should do. Now, this is caused due to a few reasons, so I'll just put this down for a second to explain. So the first reason is we've had ultra low interest rates and surplus cash from the pandemic. A lot more people had more cash than they normally would, and a lot of them dumped it into property. And this is what's caused this blue overinflated period, this overinflated price range that we see in property. So what will happen now? This blue range here has already started to correct itself and come back down to this level where it should be. However, this decline could continue to fall this way and the property crash could become deeper. And why is that? Let me explain. Now, we need to understand that there are 3 main variables that determine house prices. And if just 2 of these 3 variables are affected, then it will cause house prices to go one way or the other. Now, these 3 variables are interest rates, demand and affordability. So last year, all three variables aligned to produce a boom in property prices. So the first one, interest rates. Interest rates were ultra low. The cost of borrowing was the lowest it's ever been. You could basically borrow money really, really cheap. The next one, demand. Property is in high demand. There's a shortage of houses in this country. Thirdly, affordability. As I just mentioned, people had more cash than they normally would do. Combined with the ultra low interest rates, we could actually afford things that we couldn't afford previously. Now, we weren't able to spend money over the 2-year period. The government was throwing money at us, which meant that affordability levels went up. People could afford more than they normally would do. And this is what has caused this blue line right here to go up and cause this overinflated period. Now trust me, people don't give a fuck what something costs. All they care about is if they can afford it or not on a monthly basis. So it doesn't matter if the house was 100k, 200k, 500k, a million, whatever. If that affordability was there on a monthly basis, then people would buy it, people would pay for it. It's the actual monthly mortgage payment what determines what somebody can afford, and obviously the knock-on effect is the price of the property. So people found that because interest rates were so low, they could now afford that £400,000 house, whereas before they could only afford a £250,000 house. So the question is, what has happened now? 2 of these 3 variables have now been affected. First one, interest rates have gone up considerably, meaning that it costs more to borrow. Demand has stayed the same. We still have a shortage of houses, but that hasn't been affected. Thirdly, affordability. Now, affordability has decreased quite drastically. We've had a massive increase in inflation. We are basically poorer than we were a couple of years ago. We can't afford the things that we could before. Therefore, this affordability level has now decreased. So these 2 variables now mean that we can't afford the payments on this £400,000 house. Therefore, the price of that house now has to come down. And here we see the correction. As I've drawn on this red line right here, this is the correction, the point that we're in now. However, this correction is going to be hitting 10% or more, which results in the property market being in what we call the crash phase. Now, can you imagine if the third variable also changes and the demand for houses goes down and the supply goes up? Now, it was only this morning where I was hearing Keir Starmer mention that they're going to be putting this proposal forward where they're going to be building a load more houses in this country. And in his own words, he actually said to bring the supply down and also to bring property prices down. Now, I for one don't believe politicians for a minute, so I won't hold my breath. However, if this does happen, which it possibly could, then that means all 3 of these variables are affected. For me, that equals big crash. If you take the current demand out of these 3 variables, then we're going to be in a big problem. Well, I don't believe these politicians for a second, so anything could happen. However, one thing is for sure, over the past couple of years, we have overinflated house prices, but they are clearly now turning, and in my eyes, they have already crashed. So the question for now is, how far will they go? Well, this is open to debate, and it will be great to hear your thoughts in the comments below. Now, for me, upwards of 20% decrease in prices is very feasible, is likely to happen. It could happen. I don't think they would crash any more than 20%, but again, who knows? I've always said that it's better to be in the market rather than trying to time the market. And as I've already said, we're already in the crash, it's already here. So this means that we are now in a buyer's market. And by this, what I mean is the buyer is holding the cards. If you're a buyer, you can go into negotiations, you can negotiate a property deal less than the price that the property is on the market for. The power is in your hands. You can go to an estate agent, you can go to the vendor, and you can negotiate a price lower than what they are offering. Now, this was completely unheard of 12 months ago. However, now you have the power to negotiate some good deals. Now, if you're about to buy a property or you're thinking about investing in property, you can factor in this decline because you no longer have to worry because you've already missed the peak, the height of property prices. It's now just a case of how far will they drop. Now, if you want to learn more about property investing, if you want to build a buy-to-let portfolio, then I have a free property course. You can get the link in the description. Also, please follow me on Instagram as there's lots of useful content on there, lots of helpful information about property investing. And of course, please let me know your thoughts in the comment section below. I hope you enjoyed this quick video. I hope it's given you a better insight into how the property market works, what affects property prices and where we're currently at. I know this video might be a little bit controversial, me saying that property has crashed and others are saying it hasn't and it's going to, it's not going to. But I just thought I'd put it out there, give you something to think about, and hopefully it's helped you, hopefully that you've gained something from it. So I'll certainly be keeping my eye closely on the market. I will still be investing in property, I'll always be buying property regardless of the market conditions. So take what you like from that. I'm Jason, hope you enjoyed the video, catch you soon.